All right, guys, one more time. Mic check. Okay, seems like we actually have a microphone working now, which is good. You need a microphone when you're trying to speak to people. I'll start right from the beginning. Hopefully we can edit out all these first few minutes here. But as usual, it's Friday. It's 5 p.m. Well, 5:06 p.m. here in Estonia. I'm Kevin Mirko, CEO here at CoinMetro, and this is our weekly AMA. I'm going to start off like we usually do, going through some news of the week. I'm going to head into some Reddit questions that we curated over the last week in our Reddit thread, and then we'll jump into some questions posted live on Facebook and on YouTube. So I'm going to jump right in, guys. First item up on my news list: US-based crypto exchanges discussing self-regulation. So this story comes from basically Gemini Exchange. I always butcher their names, so I'm going to call them the Winkle Brothers. The Winkle Brothers, Facebook fame, who launched launched their exchange a couple of years back, and have been quite adamant about getting an ETF launched in the U.S. They've formed something that I think they call the Virtual Commodity Association, which is a bit of an odd name choice, I think. I don't know when they established the name, but I doubt, at least personally, that the U.S. will classify anything in the crypto sphere as a commodity. More than likely, they're going to end up classifying them as a future, especially from a tradable aspect, and a security from any other aspect. At any rate, they started this, and yes, I've seen this news. I actually tried to reach out to them. Can't find a website. Can't find any contact details, so I'm not sure how about someone goes about actually reaching out to them. But if I could, I would, and we will try for sure through other means. Self-regulation is needed when you have a new market that the regulators don't yet regulate, nor do they fully understand. Self-regulation is it's important and it's needed. It happened in the U.S. with the NFA, the National Futures Association, before there was any regulation around futures or even some types of other asset classes. And the NFA now deals with large volumes across multiple markets in the U.S. when it comes to regulatory framework, along with the CTFC. So I think it's a good step forward. It's something that we're trying to do here on the continent of Europe with the ECA, the European Crypto Association, that we're just now starting to kind of spread our wings and get in new members and begin to draft out our own regulatory guidelines, as well as membership guidelines, and to understand really what our charter is, what exactly we want to accomplish, which essentially is lobbying and getting our foot in the door in governments and regulators around Europe, in an effort essentially to help them understand what crypto is, help them classify it, help the regulations get moved forward quicker, with an eye on expanding volumes and adoption. So I'm all for this move. I'd definitely be a part. We're not yet in the U.S. officially. It is definitely in the plans to do so. So I would happily join, and we will pursue, more than likely, membership. Even now, even though we're not yet established in the U.S., because I think we could be of service, and definitely minds that think alike are always good to to put together at one table, because usually you end up getting things done. So I'm all on board for this, for what they're doing, and it's similar to what we're trying to do. Second topic here: out of 8 Wall Street exec level employees leaving their safe banks for the crypto industry. Yeah, look, Wall Street guys are risk takers, for the most part. That's why they became Wall Street guys. They also like money. That's why they became Wall Street guys. And there's a lot of money flowing into crypto. The possibilities for crypto are extremely high, even now, and they're growing every day. And there's risk involved. So it's kind of it's like a hook with a worm to a Wall Street guy. It doesn't really, nobody likes banks, first of all. It's like, if you asked 10 people on the street if they like banks, the 10 people would say no. And to be honest, even if you walked around Canary Wharf, Wall Street, or wherever in the world where banks sit, and you did an undercover ask of people who even work for banks, most of the employees that work at a bank, especially the lower level employees, would probably tell you they don't like banks. You know, the fact that they're moving away from banks to go into crypto or challenger banks or other, you know, other types of entities that aren't really classified as banks makes kind of perfect sense. And the fact that they're following risk makes perfect sense. That's what they do for a living, and obviously that's what's drawing them into crypto. And you know, we could all be wrong, right? This could be some big bubble. Sure, it could be, and it could blow up, and then 2 years from now we're all doing something else. That is a possibility. Obviously, I wouldn't be sitting here if I thought the possibility of that was higher than almost nil. But it is a possibility. But again, this is what good Wall Street guys do. They follow their gut. They follow their initiative. Sometimes they're right, and when they're right, it pays off huge. And when they're wrong, it blows up in their face. Obviously, a lot of them are taking the step towards crypto, again, because it's risk, and they like risk. And number 3, this is a funny one. Venezuela pegs its national currency to the Petrol. So those who don't know, the Petrol is a cryptocurrency that Venezuela went through an ICO with, based on the Ethereum blockchain. So you have a government, I think they touted their ICO at something like 500 million. I don't remember the exact amount. I think they said they raised 700 million. Of course, that's never been verified. But they did it on the Ethereum blockchain. You would think a government that was trying to do an oil-backed and asset-backed security would have at least created their own blockchain. But hey, they did it on Ethereum. They got some press for it. And now because of hyperinflation of, and I quote, 1,000,000%, they're looking to kind of defend against that by pegging their national currency to their asset-backed token on the Ethereum blockchain. Obviously not a good move for many, many, many reasons. But when you have 1,000,000% inflation, I guess you'll pretty much do whatever needs to be, that you think needs to be done. And Maduro isn't necessarily a economist by any stretch of the imagination. So yeah, definitely not a good move. It's rather comical. I wasn't a fan of the Petrol before. Still not a fan of the Petrol at all. You're basically taking a useless fiat currency and pegging it against a useless token. So take that for what you want. Take it for what it's worth. But it's probably not a good move, and I assume will not end well. And it's probably just more of a PR push, maybe a stunt. And I assume when it fails, they'll have some other way that they're possibly going to try to battle this hyperinflation. You know, there's really only one way to battle hyperinflation. It's devaluation, and then major changes, especially when countries basically control pricing. The country controls pricing across pretty much all industries, and obviously that needs to change. And probably civil war is what's going to happen before that changes, so unfortunately. Number 4, Liechtenstein's Union Bank launches its own regulated security token and stablecoin. So I read this actually before it was posted here. I'm not a fan of stablecoins. I guess everybody already knows that. There are laws on the books throughout most of the world that do not allow you to create your own currency. You can create private currency, and obviously, well, the debate is out on how you would classify these stablecoins. It's a bank doing it, so I guess it's got a little bit more credibility than a Tether or whatever other stablecoin currently exists in the market. The security token, they're all security tokens. I'm sure anyone at the bank I talk to would agree with me. But you know, using the vernacular that right now is out in the world because of some frameworks, not frameworks, but guidelines that were created by, let's say, Switzerland and Estonia. A lot of people use the security token word. You know, it's a security, period. You don't need the word token at the end of it. It's a security, and all tokens that go through ICOs are securities, period. End of story. The good thing here is that you're starting to see banks, small banks, private banks, not retail banks, unfortunately, but you need to start somewhere, are starting to publicly show their interest in these types of assets. They've had interest for years now behind the scenes, even if publicly they said they didn't. The fact that they're now coming out publicly is a good step. Hopefully we see a domino effect here where we'll see other banks doing the same thing, and then eventually larger retail banks. because private banks, in the grand scheme of things, don't mean much. But what it does mean is that we're moving in the right direction. So moving in the right direction is always good, even if it's slow progress. I don't necessarily believe in the stablecoin per se. I think there are applications for tokenized, let's say, fiat assets, depending on, for different reasons. The stablecoin in and of itself, especially when you're a bank that's allowing crypto, why don't you just allow easy fiat access and allow people to buy in, get into your bank via crypto and withdraw and deposit funds? Then you don't need a stablecoin, do you? But the reason why they're doing it, obviously, is because they're loopholing. They're loopholing because they can easily create a fiat-backed token easier than they can allow direct Bitcoin deposit into their banks. But because they control the token to a certain extent, I'm sure the regulator, they basically kind of went into the regulator and probably started talking blockchain, consensus, liquidity. Regulator had no idea what was going on, and they basically got them to agree to the fact that they could have their own asset-backed token because it was somehow less volatile or more stable than just allowing Bitcoin deposits. So I'm sure it's generally a loophole fixer, but again, it's progress. So I'll take it for what it is. Number 5, BitMEX paying around $600,000 monthly. That's USD rent for their Hong Kong office. Well, I think somewhere I just heard, I heard the sound of, I don't know, 500 or 600 CFOs passing out and hitting their head on their desk on the way down to the floor while they were vomiting and, I don't know, convulsing at the same time. You know, I don't know. A lot of financial companies get really nice, pay a lot of money for really nice offices in the financial districts all around the world because it's not because they need it. It's not necessarily because it's a requisite. It's because it's prestigious. So obviously BitMEX is trying to show a little muscle here. The fact that with their 100-to-1 leverage on non-backed Bitcoin futures, they're making some money. So, you know, hats off to them. They've been handling, I would hope they've been handling the risk well. They're profiting. That's great. So they're spending a lot of money in an office. I would assume they're probably bringing in 30 to 40 times that a month, hopefully. So this is, you know, normal. But it is a huge amount of money, and it's definitely for a bit of prestige. I don't think I'd take the route exactly. I'd probably open 10 smaller offices in 10 other regions of the world and focus on acquiring licenses for my underlying activity. So in a year from now, 2 years from now, I don't get put out of business. But to each his own, and I'm sure it's going to be a really nice office. Number 6, SEC rejects 9 more Bitcoin ETFs. It's news, but not really. The news right under this, number 7 on my list is, or maybe they don't, they actually came back to say they were in review, probably because they got a lot of backlash. Backlash from probably a few institutions that have been holding Bitcoin since 10, 11, 12, 15, 16,000 and are a little pissed off that they can't open the doors to some more retail clients to try to bolster the price. So we'll see what happens. Eventually one of these will get approved. It's going to cause probably a bit of bullish activity in the market initially. But as I've said a million times, I wouldn't expect it to bolster or hold the market over a long period of time. And there's a few questions I think on Reddit about it, so I'll go into a bit more detail here shortly. Well, once I get to the questions in Reddit. So that was the last one last one on my list here for the news. China continues war on crypto. 124 foreign crypto exchanges blocked. I think China is getting very close to basically pushing out regulation. Or starting the process, and one of the first processes in order to basically push regulation into your country is to make sure that you have a clean slate, meaning that there's no outward companies doing the regulated business underneath your nose. You want to create a precedent that it's basically a zero. You're at zero again, and the regulation needs to start from scratch. So I think it's good news. Good news in the fact that they're probably getting closer to actually launching some more detailed guidelines and frameworks. I don't expect them to not regulate, and I don't expect them to continue, let's say, some type of all-out crypto ban. They know it's not in their best interest. They know that even now there are all kinds of monies flowing outside of their country through Bitcoin, and when it's not regulated, they can't track it as well. When they can't track it, they just get upset about it. So China hates when money leaves its country. It likes to be able to regulate and put a hold on assets leaving the country, especially in foreign currencies. So they're going to regulate, and I think this is kind of probably one of the last major, let's say, news announcements that looks negative, that's actually positive, that they're very close to getting to the point where they're going to start to release some regulation. So onto Reddit questions. Number one from Lazy Jones. Have you heard about the Winklevoss? There you go. Brothers Initiative Virtual Commodity Association for Crypto Exchanges. Okay, its aim is to develop industry standards, promote transparency, and work with the regulators, including the the CTFC, to prevent fraud. Would it be an option for CoinMetro? Yeah, as I said, the name I think is a bit odd. I think they probably had that. They probably booked that. They probably bought that name or registered that name quite some time ago. But having said that, yes, I would be happy to join. We actually looked for a website. We tried to find some details on how we could do that, but I couldn't find anything. So obviously you have Bitstamp, you have Bittrex, you have their own Gemini exchange, and I think there was one more, maybe Kraken, I don't remember, that was included in the list. So obviously they do more volume than we do because we're not yet open, but I do think that the more people that get together with like minds, the more we can do. And even though we're not currently in the US, it's obviously on our roadmap. It's I hate to say the word roadmap. It's obviously in our plans, and it's obviously something that we want to do at some point. So getting involved in something like this, not only in Europe but also in the US, makes sense. So I'm ready and willing. So we will try to reach out and we'll see what the possibilities are. It might not be something we can do immediately. Maybe they're going to require some type of US presence. I don't know. If they do, then it's something for the future. But I applaud them for what they're doing, and it's essentially what we're trying to do here in Europe. So I would, once we do get our own European Crypto Association really up and running, I will be inviting pretty much everyone on that list to join us in the fight here in Europe as well. CoinMetro fan, you've constantly rubbished the idea of Bitcoin ETF having a significant effect on Bitcoin prices. That may be true for synthetic ETFs, but what about the physically backed ones like the ones proposed by CBOE? This ETF will buy physical Bitcoin and is secured. If approved, it will enable pension funds to safely invest in physical Bitcoin for the first time. Imagine thousands or millions of retirement accounts being set up, regularly invest a portion of their income in Bitcoin. This could be a game changer. Okay, so I would say yes, if it's 100% physically backed, it can make a difference. But I would caveat this. Since, I'm going to say October 2015, we've had ETNs, electronic exchange traded notes, available from the NASDAQ in Sweden that have been available through brokers worldwide. These ETNs have been around then for about 3 years. There's about 100 million, I think, euros equivalent invested in these ETNs. Most of that money flowed in within the first year, I believe, year and a half of when those ETNs were established, and made almost no real change to the underlying market price. And they are physically backed, 100%. When you talk about ETFs, you have to understand, and by the way, if you want to look at those ETNs, the name of the provider is XBT Provider. You can buy them. One of the major brokers, banks that sells, is Saxo Bank. It's an ETN, and it's called the Bitcoin Tracker 1, Ethereum Tracker 1, Bitcoin Tracker Euro, Ethereum Tracker Euro, and they've been around since October 2015. You have to understand that the market we're dealing with is a fragmented market. There's no centralized pricing. There's no centralized exchange. You have a lot of dark pools, a lot of what people like to call OTC, and I cringe every time I hear that word. I wouldn't imagine that a ETF that plans to take in pension funds in the hundreds of millions to billions of US dollars would be buying their Bitcoin on Binance, Kraken, or CoinMetro. They're going to be buying large chunks of Bitcoin, more than likely from people that already hold Bitcoin via some type of dark pool or off-market swap, which means that it won't be public information. We won't see it in an order book, which means it doesn't necessarily immediately affect price, whether it's physically backed or not. Plus, you have to take into account the physically backed. Is it 100% physically backed? Can they back it with options that are, you know, so even if it's 100% physical backed, you have to understand that, again, if they were even buying 10, 20, 30 million a day, they would clear out the books on every exchange available, and they would be paying 2 to 3 to 4 to 5 to 6% in slippage. They're not going to do that. They're going to go to larger holders, banks, institutions that already hold that Bitcoin, and that's where they're going to run their market. And they'll probably do it through some type of swap, which is physical, but actually still, let's say, quasi-virtual. So I don't think it has a lasting effect. I think it will have an effect when the news is released versus a lot of people waiting for news. News released will have effect. Every time there was one for the first couple launches, there will be an effect. It may bring some retail money back into the physical market on the exchanges. At the end of the day, it will advance adoption, which will advance usage, which will advance difficulty, which will make the mining cost go up, which will make the underlying price move. So I'm not saying it has zero effect. What I'm saying is I wouldn't expect someone to launch an ETF and then all of a sudden Bitcoin's back at 20K. I think that's way outside of the realm of possibilities. But I do think it definitely will. It's a positive. It's positive news, which means it's positive news. I just don't expect what a lot of people seem to be expecting. Going down back here to third question. I read recently, that OK Coin Exchange is offering margin trading and also short selling with leverage to the U.S., California customers and is rapidly expanding to other U.S. states. I believe it is the only one in the U.S. offering this, unless I'm missing something. I think there is huge demand for margin trading and short selling at leverage in the U.S. BitMEX and Bitfinex are two popular exchanges for short sellers. Legally does not allow U.S. customers. Will CoinMetro be able to offer this service soon? So there's a bit difference, right? Because you have BitMEX that offers a synthetic product, a future, and I don't know BitMEX's model. I think they're probably using CME futures to probably hedge most of their risk, though they may be taking risk internally. I don't know. Then you have Bitfinex, which is actually doing margin lending like we plan to do, which is a different story because you're able to basically buy on leverage physical crypto at exchange spreads, so much lower than most spreads you're going to see on a future or on some type of derivative. So is it in our plans to go in the U.S.? Of course it is. Is it in our immediate plans? No. The U.S. is a big market for sure, but it's not the biggest. And when you combined Asia Pacific, Asia, and Europe, it's larger than the U.S. So, and if you add South America in there, which is an untapped market, you have a lot of potential. So add Africa in there, which is an untapped market, you have a lot of potential. So for us as a small competitor right now, as we grow, attacking the U.S. immediately would probably not be the best idea. Why? Because there's lots of costs involved. Even someone like OK Coin, who obviously has some money in the bank, went for one license in one state initially. Of course, they probably did some market research to see where most traders sit. California is one of the biggest states, like Texas. Maybe they just did, California's big, and that's where they went. I don't know. Point is that they did one state, and they're probably going to do 3-4 states at a time, and that's essentially what we would do. But in order to do that now, it's a lot of legal costs, it's a lot of time, it's a lot of effort, and we have other things we need to focus on. So for me, our overall objective has always been to be, let's say, regional. The plan is to be number one, or let's say top 5 in multiple regions around the world, which basically makes you top 5 globally. But what it allows you to do is focus on regional regulation, regional PR, regional advertising, and to take over a region is much easier than taking over the globe, but there's a domino effect. So yes, we plan to offer that service shortly, let's say, shortly after we go live, but we would do it in Europe. We're pushing into Australia. We're going to try to push probably into somewhere in Africa as well for the commercial aspects, not so much the regulation, though South Africa, if anybody doesn't know, is the only regulation outside of the EU, the US, and I think Australia may actually be on the list. I'll have to look at that one. That the EU actually recognizes as, let's say, parallel with their own regulation. So if you're regulated in South Africa, they consider you to be on the same level as having a MiFID 2 or a PSD 2 level license. So Um, for again, so for South Africa, it could be regulatory reasons, but we will push into the U.S. I wouldn't expect it 2019, maybe towards the end, more than likely into 2020. I know a lot of people would like to see it quicker. I'd like to see it quicker, though I don't, to be honest. I would like to see a national regulation in the U.S., the CTFC, for example, pick up the reins rather than having to go state by state. Doing the works to state by state is going to cost you roughly probably $20 million in legal costs to get through all states. You probably can do it for cheaper, but some of those states are going to require local presence. Some won't. You may be able to do it for $5 million on the cheap, super cheap. But you're going to spend money, and then as soon as the national legislation comes out, and it will, you're kind of back to the drawing board. And you still need multiple licenses in the U.S. to run that business. Because you're talking about lending, you're talking about receiving fiat currency, adding fiat currency to wallets, you're talking about a lending platform, you're talking about lots of different state licenses, which is quite burdensome. So it's in the plans, but it's not something I would expect in the short term. Sorry, I had an additional question here from the same author, Desmond. What is the update of UK license application? I was curious to know, as one of our competitor, Coinbase, secured a banking deal with Barclays. Also, in other countries, did see him apply for exchange licenses and pending? So actually, Barclays gave him that account 4 or 5 months ago, I think. It's not really news anymore. But they're not using that account yet, as far as I know. But yes, they have an e-money license. We are in the process. I do believe we're probably going to go through an agent license first, meaning that we're going to go through a third party to get a license under their license. It's going to allow us to do all the same operations. It's just streamlined, it's faster, and then 6 months to a year later, we will upgrade that to a full license. It saves us a bit of money. It saves us a bit of having to hire people locally in London. It saves us on some minimal capital requirements. And this way we can spend that money elsewhere. So yes, in progress. We expect probably, hopefully, definitely before the end of the year. Hopefully right after our Q3 kind of deadlines that we have sitting over us, we will have that license on the books. Can take up to 2 months, but I do think we may be able to get it done sooner. Number 4 on my list here of how many questions we got this week? 6 only. So. Number 4, excuse me for 1 second. Sorry about that, guys. Okay, so number 4, greetings, Kevin. Pardon my English mistakes. I'm an early investor with CoinMetro. Just have a quick question. As per the recent trend, the second generation exchanges like Fcoin, COZ, and a few have gained a lot of attention in the market. I've never heard of them, by the way. With 100 times, I'm serious, I don't know what they are. That doesn't really mean anything, just putting it out there. With 100x in a few weeks, I guess that's on their token. COZ 20x in 3 days. They brought a lot of innovative ideas to attract traders. Some of the ideas are where they are more like super nodes for staking, rebating coins to avoid transactions fees, buyback programs. I'm not discounted. We also have more or less similar plan like buyback, coin burn, etc. Are we planning to exchange our roadmap white paper, by implementing some of the innovations which is already hot via Fcoin? You know, we're always about adding, basically adding value. You need to have a structure though to add the value, and it's very easy to come up with ideas. I could whiteboard 500 ideas for you probably in an hour and a half, maybe not 500, 50. That no one's doing that are possible. That doesn't mean that we would need different regulatory licenses. I mean, you get into a little murky water at that point, but ideas are easy. The idea here is basically to make a single platform that's essentially Revolut, Currency Cloud, TransferWise, Coinbase, and let's say Saxo Bank, all wrapped into one. Meaning you're able to trade multi-assets, you're able to move money around in exchange for next to nothing, you're able to move money around the world in only a few days with almost no fees. You have multiple types of debit card products that allow you to have access to insurance, that allow you to have access to all kinds of different perks. It's about bringing all those different platforms into one. That's the ultimate goal. What it means is that we have the ability to add revenue streams. When it comes from a commercial angle, these are all revenue streams. Well, buybacks and stuff, I guess, essentially aren't revenue streams. Buybacks are an important feature when it comes to token economics, but token economics become less important to, let's say, for revenue purposes. Obviously, there can be revenue tied to the increase in your token value for sure if you have a reserve of tokens. But what we're really talking about is adding revenue streams. I'm going to go on and read the rest of your question here. I know we are a little late with our launch, and I'm worried. I think we need to keep an open mind regarding the market trend and adapt to new thinking and strategy as much as we can. These new exchanges surpass already existing exchanges in just a few days, which is something to note for. I understand some look like Ponzi scheme, but certainly their logic behind attracting new bees. Sure, attracting people in a token sale is one very specific skill set. Creating a business that can last in a regulated marketplace and having it flourish is a whole nother skill set. So I would say I'm better at the latter than the former. I never ran a token sale before this one. But I've run businesses before and financial businesses. So I wouldn't be too worried. And I know it's easy to get worried because you think, oh my God, look at all these. Every day, you know, I see a new ICO that has something that kind of similar to what we're doing or whatever, but that's an ICO. The percentage of ICOs, no matter how much money they raise, that'll actually become successful businesses is probably under 5%, honestly. And when it comes to exchange, it's probably even less than that. So even if you see 100 of them, maybe one will end up actually becoming successful. It's a very difficult market, and it's going to get much more difficult as the regulations start to roll in, harder than they are right now. And those that aren't suited for regulation, no matter how innovative they are going to die. Yeah, I wouldn't be too caught up in that, to be honest. We want to provide innovation, and we will, but obviously our focus right now needs to be on what we need now. You know, you can get really put pressure on yourself with all these new ideas to try to do everything at once. You can't do everything at once. So you need to structure. You need to structure, and you know, you're going to spend a lot of money on regulation. You're going to spend a lot of money on making sure that your compliance is in order, that your house is in order per se. So you need to make sure you do things, you know, in stages. So there will be a time, and we will open this up to the community. We want to know what people want, what they like, what other exchanges are doing. I have no problem being the second to launch something, or the third, or the fourth, or the fifth, if we do it right. That's it. I'd rather be the Apple in this instance than the Android, let's say. You know, Apple used to get flack all the time for not innovating because they only did things other companies did. But, you know, you can look at their market cap now and figure out which of those entities kind of was doing the right thing, was following the right code when it comes to developing new merchandise or whatever. They basically took what was existing and waited until they could get enough feedback or see enough market trends to understand what worked, what didn't work, and then just simply made it better, a little bit better. And every iteration just a little bit better. And it worked. And I'm not saying that's what we're going to do. I'm not following that exact, let's say, methodology. But we do need to understand that in order to do this right, we need to have some narrow focus as we launch and release these different stages of the business. There are more than 75 exchanges popped up in the last 9 months, and only a very handful have seen the light so far. The real question is, did we cover all the areas to succeed? No, we haven't. But it's something that the difference here is that we know what they are, and we are taking our time to make sure we do it correctly. And just like I said, it's kind of the same point that I had. And you'll probably see 100 or 200 more. And again, most are going to fail. But that's every business, though. That's not just exchanges. If you know, the people who open up a corner store, only 5 to 10 to 15% maybe actually succeed in the business. The people that this type of number floats around life, and we see it in every walk of life, whether it be the people that, you know, want to become a doctor and fail medical school, the people that want to open their own business and fail and end up going back to a job, the people that want to succeed in their job and never make it up the ladder, all these types of things. Failure, unfortunately, happens more than success. So, you know, you just, seeing how many are coming, it doesn't bother me. It really doesn't. I'm focused on making sure that what we do the best that we possibly can, and that we make sure that, one, the regulatory aspect is nailed down, and two, that the tech aspect is better than most, if not better than all, in many aspects, especially on the back end where it counts the most, and that we run the business with the correct protocols so that we maintain security, and we're able to basically push forward and past everyone eventually, regardless of how many gimmicky things they try to release to maintain market share. Gubsy, number 5. Has the impending Brexit had any impact on doing licensing in the UK? Wait a minute. Did I just look at a? No, this is, yeah. Sorry, I thought I was looking at last week's. I swear to God, this question was in last week's. Ongoing licensing. Can you have any regulation problems changing going forward after the split? No. What you have to understand is that for banks, it makes a bit of a difference because for banking, and again, London is London because of banking. The one thing London will not give up is the ability to do business in the EU when it comes to banking and insurance and other, let's say, larger financial infrastructure businesses. They're not going to give that up, never. And to be honest, the EU can't really let them give it up because if it wasn't for London's banking, many big portions, even Germany, would be under, wouldn't exist for the most part. So that's not going anywhere. What you have is, you have a situation where if we have an e-money license in the UK and Brexit hard, super hard, crazy hard Brexit happens and the English Channel swallows London, the worst case scenario is that we can't direct solicit clients for e-money licensed activities in the EU. But any client that has to deposit euro or pounds from anywhere in the world can still deposit through our accounts, through our e-money license, and get onboarded. So it doesn't make much of a difference regardless for our specific business. If you're a bank and your main operations are in the UK and all you did was passport through Europe to open branches, you could be screwed. You have to then go and get direct license in each of those European entities, or at least one European country, and then passport from that European country. That's why many banks are en route to the Netherlands. They're en route right now. I would say the Netherlands is probably almost the #1 journey. They're en route to Germany. They're en route to other locations so that they acquire a new main license, and they're able to then passport from there if need be. That's really the big issue for banks. For us, it really wouldn't have too much of an effect. Robin Timmerman, what's your opinion on CoinSquare expanding? Would you mind dumbing CoinSquare? Let me take a quick click on this link because, to be honest, I hadn't read this one. Hadn't seen it in the news. So they're coming to Europe. Good choice on their part. That it would expand its business into Europe market by the end of the year. Thus, potential clients across Europe will be able to access. Okay. First step in global market when it partnered with crypto market back to Japanese client. Okay. CoinSquare was founded a few years ago. Okay. Doesn't really give any real insight on how they're going to expand. Whether they're going to actually gain licenses or do what they did in Japan and hook up with a third party. Look, they probably have European clients on the books anyway, so I don't think this really changes their scope. I don't know if they're going to try to go regional when it comes to advertising, or they're just going to maintain their overall, let's say, global reach. There's not enough information there for me to make a real comment, but obviously any business in the world that's involved in anything at some point wants to move into Europe, and when it's financially related, obviously Europe's a pretty big piece of land on the map, right? I mean, it makes sense to move in. So, means that they made some money in Canada. Great, because we're going to move over to Canada at some point as well. It means there's some market share to steal away, and it tells me that everybody's looking at Europe, and we're in Europe. So that says, oh, good choice for the first place that we let's say put our headquarters in Europe. Good on us. Not enough to comment, but again, it's good news. I didn't ever think we'd be the only game in town, and I didn't ever think we'd have the ability to just gobble up all this market share with that before anybody else did it. The point is that everybody has a slightly different business model. I don't think anybody's business model right now in this market is our business model. So there's always going to be ways that we can capitalize on that, regardless of the competition or who or what may be trying to go after the same client base. Would you mind dumbing down the TAM fee structure one last time? I understand the high watermark concept regarding the performance fee, I think. But about the commission fee, are those 0.1% on every trade the TAM manager takes, or the 1% deposit withdrawal between the wallet and your TAM? All right, so a TAM account or a TAM manager is trading just like any other trader. So every transaction they make on the exchange is going to cost them 0.1%. That means when they do a Bitcoin USD trade, or buy or sell, it's going to cost them 0.1%. When they do a Euro USD trade, it's going to cost them 0.1%. So it's on every single trade. We do not expect to charge deposit and withdrawal fees. That doesn't mean we will necessarily cover fees that are associated with certain withdrawals, meaning that if you're going to do a SEPA transfer, I think we're charged 40 cents for those. You're going to get dinged 40 cents. On deposits for credit cards, if you're in the European Union, it's going to be like 1.5%. And if you're outside the European Union, it can go upwards of 3%, 3.2%. So those fees are going to be covered by the client, but we're not going to charge fees for deposits and withdrawals. And just to go over high watermark as easily as I possibly can, I'll give you just a scenario. Let's say there's 10,000 in the account, in the master account, and so there's 10,000. That's your high watermark at first. That's the deposit. 10% is made month 2, so it's 11,000 now in that account. Let's say the manager makes 20% of that. He gets paid 220 euro, basically, because he makes 20% of that 1,000 200 euro, because he makes 20% of that 1,000 that was basically created or earned. So now the balance goes to 10,800. So obviously your watermark hit 11,000. You're now at 10,800. In order for him to get paid again, he's going to have to make at least over 200 in order to see another payday. Now let's say that the next month he loses, let's say 8%. So now he's back to 10,000. And the next month he makes 20% and he goes to 12,000. He's only going to be paid the difference between that last high watermark and this high watermark, which was 10,000 or 11,000, sorry. And now he's at 12,000. That's 1,000 difference. He's going to get paid another 200 euro. That's essentially how high watermark works. That'll be the main payday. That means they're incentivized to actually make money. The fees on the trading is just what everybody else pays. There's no difference between what everybody else would pay and what this TAM manager would pay. When we lower fees, they get the lower fees as well. It's just like a regular trading account or a regular exchange account. Okay, guys, I think that does it for Reddit. Fortunately, today we didn't have our normal meeting, so as far as updates on the dev, what I can say is that I've been working along with operations on our intermediate exchange. We've been working back and forth, finalizing a little bit the simplex exchange, and the trade view is being worked on as well. We're starting to work on ETAs for different things like margin trading, the initial start, the coding, basically the initial programming, initial development of margin trading, lending facilities, advanced trading features, integrating different payment types, integrating different things on the back end, exchange, C++, performance tuning, quick fix implementation, transfer daemons in order to get our wallets connected in. All these things are now starting to get specific ETAs behind them. Next week, I do hope to basically restructure a bit the way we show these roadmaps, so that the roadmap basically is a smaller time frame and is a bit more intuitive. Gives dates based on different let's say pieces of the overall goal, and so we're working on that as well. From a hiring perspective, we've been looking around. We've had a few candidates for compliance. We've had a few candidates on trade tech support. We've brought in another blockchain developer who I'm told is exceptional. We've brought in now we're looking for a couple full stacks here in Estonia. So lots of things going on around the way here. We're still in kind of this vacation mode here. So we have people on vacation every week or so. There's a few people that are in and out. Marketing is pushing forward with a big regional attack here in Estonia, which will start to happen towards the end of October, early November, which will lead up into an election cycle here. So we're going to start to make ourselves much more known here locally, which obviously will coincide with after the closed beta live launch into the actual live launch. So lots of things going on. Next week I'll put together a little more instructive update. Usually that's on me, and unfortunately I didn't have time to gather the data this week. Lots of things going on, lots of meetings, lots of phone calls, lots of different partnership ideas coming up. We have a great partnership that we're kind of working on right now that involves that involves a platform that basically allows Bitcoin, that basically allows crypto and fiat payments between. It's like a WeChat for crypto, but it does a lot. It does a lot of different things that WeChat doesn't do, and it allows us to integrate it right into the exchange, and then allows merchant capabilities, things that we've already planned on doing further down the line. It gives us so that's one thing that I've had 3 or 4 different talks. We have an asset-backed token here in Estonia that we're in talks with right now. There's a few things that are going on. Anyway, sorry I couldn't give you the more holistic update, but I want to jump into the Ask Me Anything so that we can get a few questions answered for you guys, and then from there we can come back and I'll see if something else rings a bell in my head for our updates. So I'm going to start on Facebook. I see here. I think you've answered my, okay. In the rant. Okay, let me see. Kalichi, Kalichi on Facebook, also Tokenist Tokens has been in exchanges for about 3 months now and it's doing miserable. The current value is less than ICO discounted sale price. Is really similar ICO to CM. So what would you say to someone that is scared CM might follow suit? I think you have answered my question. Yeah. The one thing I would add to that is every business is different. So I think in any investment, you really need to focus more on medium to long term. I don't know Tokias. I don't know of them either, so I can't really comment. I haven't really seen anything they've done. I think the delay here for minting, one, we pegged our token to the euro. So let me give you a scenario. If you bought at 3 cents, let's say, and euro and Ethereum was at 1,000. And Ethereum now at under 300, even if the token were to go to 1 cent, you would be at break even. So I think that needs to be something that's in the back of people's mind. When people asked us initially why we would peg it to the euro and not Ethereum, the idea was always a what if scenario, and I think the higher risk has always been for crypto to fall rather than it to go higher, to be honest. So there's that one. Second is that the delay means that we're not minting, we're not distributing until everything is live, tested, and we're ready to roll. We have liquidity, we have fiat, we have all these things already lined up and ready to go in. And I think that's going to it's going to affect the hype cycle, which right now is what majorly affects pricing. So that definitely plays a role in overall what will happen. It's probably going to lose some value for sure when we initially list it. That's just the way these things go. But I think we're building out the ability to be able to stifle that loss as much as we possibly can. And we'll start building in a hype cycle as well. We will start building in some additional PR, some additional outreach in both normalized, let's say, traditional financial publications and the crypto publications, with different news about fiat offerings, with different news about custodial offerings, different news that the market needs and that other big players have been working on and failed at or haven't yet launched or just launched. So I do think it depends. Every business is different, right? Ideas are easy. That's the point. We could come out with PR about what we're going to try to do or what we want to do all day long. But there's a big difference between what you want to do, what you think you can do, and what you've actually done and are doing. Well, we have the Gerardo on Facebook. Will we have fiat deposits on day one of launch? If so, which? It depends right now. Fiat on launch. It depends right now on that e-money license, on how we operate the fiat, how we allow the fiat in. But right now we have a retail bank account for euro deposits in the SEPA zone, so inside the EU. We also have on-ramps through payment institutions for USD, Euro, Pounds, Canadian dollars, Australian dollars, Japanese yen. So we're also looking at other banks, and I do believe we will acquire some other bank accounts here, maybe even before launch, to allow for other currencies. So credit cards, we have now confirmed USD, Pound, Canadian dollar, and Euro. And that can be directly from launch. The caveat there is that at launch, more than likely, you won't be able to fund a Euro wallet with your credit card, but you'll be able to use your credit card and buy Bitcoin at the spot rate based on our exchange and or Ethereum or whatever. And that will get deposited to a Bitcoin or Ethereum wallet. That's the one caveat on the credit card, at least from the initial launch. Let me check. Let's check YouTube here, which I just closed. Clumsy fingers, Friday afternoon. It's been a long week, guys, and in a good way, but it's been a long one. So unfortunately, running these, I can't reach. I can't reach YouTube. So I could see if I could see it here. Have you heard of Backed from the owner of the New York Stock? Yes, ICE, New York Stock Exchange for sure, allowing Bitcoin to be bought through a regulated exchange and will look after custody. Can CoinMetro compete with the likes of NSE for Bitcoin? Can we compete in certain markets? First of all, they announced this. How long it takes them to actually launch it? I know they said, I think they said maybe the end of the fall or something like that, but we'll see exactly how that pans out and exactly how they actually structure their offering and who they can offer it to. But can we compete with them for that specific offering to specific subset of clients? It would be difficult, because if you have guys that already do business with the New York Stock Exchange, and they have an easy way perhaps to just move over and start buying physical Bitcoin in custody, it's going to be hard to pull them away, unless obviously our fees, or we're paying them to make into our exchange, and the New York Stock Exchange will not do, at least initially. So we do a lot of things, I think, that I haven't seen done yet. That doesn't mean that they might get done by someone else. We'll see. But can we compete with them? Of course we can. Why? We offer many more services than they do. This is the same thing. You look at the challenger bank market. Look at the Revoluts and N26s and Mondes, whatever the name is. All these different challenger banks that exist. Why do they all exist? Well, how many banks exist in the world? How many FX brokers exist in the world? How many alternative payment options exist in the world that have maybe not a large market share when you look at percentage, but have a good amount of turnover? And all they do is offer usually one service. When you look at, why do people go to Revolut rather than X? Well, Revolut's got a metal debit card now. I mean, Revolut offers, exchange in a currency I need. There always is a reason that, even though you may or you look and say, wow, this is owned by the New York Stock Exchange, but I want to be able to invest my crypto. I want to be able to diversify my assets. I want to be able to move money in and out relatively easy with a push of a button. I want to have merchant access. I want to be able to buy insurance for my assets. I want to be able to do this or this or that. I want custody. There's many different things we can add in, and what I'm talking a lot about regulation, but some regulation, let's say, can stifle some of those things. And we have the ability, because we can be flexible, to only go after regulation that allows us to do these services that may or may not cover other services that don't you need to be regulated, and allows us to place those services in other entities in the group so that we can maintain the offering. So yes, I think we can compete. In specific, look, it's like if somebody loves Nike and that's all they wear, they have Nike shoes, Nike shirts, Nike t-shirts, Nike hats, they're not going to buy Adidas. I don't care if it's cheaper. I don't care whatever. They like that brand and they feel comfortable with it, right? So there's certain subsets of clients you're never going to win over, but there's certain clients that are going to look for value. They're going to look for price. They're going to look for support. They're going to look for knowledge. They're going to look for easy access into other services. And I think out of everybody that exists right now in the market, let's say we had the services even just from our white paper that we planned, and they were here today, there'd be no one else offering those. And on top of those services, we have multiple services that aren't on the white paper that are already kind of in the works. So yes, I think we can compete. Why do you think this happened? Could something like this happen on CoinMetro? Why do you think this happened? I missed the actual initial question. Let me see if YouTube wants to load now so that I can see it from YouTube. Yep, looks like it's loading. Give me a second, and I'll see if I can find the question that came along with that second post so I can answer it for you. So, okay, I guess we could, I posted this, it was somehow blocked. I don't know how that happens. So you said, it's from DEFCON 0 on YouTube. Did you see the recent wick on XBT USD on BitMEX? They had some crazy wicks. See here? What do you think this happened? I haven't seen them. Not sure I can click on this link the way it's embedded. Regardless, I've seen a lot of crazy wicks in my day in FX. So crazy wicks can happen for many reasons. One, you have to understand there's no centralized pricing here. Now, while BitMEX probably, maybe at this point they don't, probably pulls pricing from several places. Whether they pull liquidity is, I don't know, but they probably pull relative pricing. It's all about price discovery. So normally how we deal with this in FX is, one, you have a base rate, you have a base feed that's just market data that you compare all your incoming quotes to. And this is part of price discovery, which literally nobody does yet. So if you have, let's say, normally you would take, in this, let's say you would take the CME's future on Bitcoin, right? Just for an example. You would watch those pricings coming in. Let's say it's at 6,400 USD, and then somehow you get an order that hits your book at 7,800. You would have filtering in place, and that filtering in place would be able to see that order, would look at that order, would try to figure out what happened in the book to see where it sits in the place in the book, and would reject that order if it truly shouldn't be, there shouldn't be the ability to publish it. It could be an issue with an internal engine that's basically throwing out orders, and it allowed the order to be pushed into the book even though there were subsequent orders sitting before or after it that should have been pushed first. It's probably a technical issue, and if it's not a technical issue, it's a liquidity price discovery issue. And yes, it can be solved, and actually quite easily, with a lot of tools that already exist in the market that unfortunately haven't been yet applied to this crypto markets. Let me jump back on Facebook here, see if we have something. George Ting, what is CoinMetro's relationship with Bitcoin.com? We don't have one. They did publish some news about us. That's because, well, we sent out a couple press releases and they picked it up. Will there be a user-to-user asset fiat transfer functionality within CM? User-to-user fiat transfer. There's a bit of a regulatory murky situation around allowing peer-to-peer. Now, the fact that we've already KYC'd everyone and went through AML and PEP, and we're doing transaction screening, I believe, yes, we will offer something of that nature. I just talked about it a bit. We're in talks right now to do a partnership with a company that essentially developed a WeChat for crypto that would allow us to take our community portion of our exchange and allow basically what you're asking with a click of a button. And would induce more volume back into the exchange. It also would allow us to do easy merchant services where the merchant doesn't need any software, or they just download apps on their clients, or not their clients, but their employees' phones, and they're able to basically pull everything in a merchant account, get paid in fiat, but accept crypto through our exchange. So yeah, I do think, again, it's not a day one thing. But yes, I do envision, the problem with peer-to-peer is that there's no KYC layer. We already have a KYC layer in place. So for us, from a regulatory angle, peer-to-peer is not that much of a hurdle, though there still is a bit of a hurdle when it comes to regulation, because in some aspect, we're going to need to know why the transfer is being made. So we need to be able to streamline that process a bit, and that would be what would take a bit of time before we could actually push it live. Crofty Vlad. What would you think will be the mind shift catalyst that will make retail investors throw themselves into buying, investing small amounts in crypto again? Well, like the famous saying goes, a sucker's born every minute, and don't take that the wrong way. There's a new person in this market every second. So the people that, let's say, got burned because they didn't do their homework, bought high, and ended up having to sell really low, may never come back to this market. But there's a new one of those guys every day. So anytime you start to see a new bull run and we start to see media coverage and the hype rolls back in the market, you're going to see retail guys jump back in. In order to maintain those guys, we need to see some type of price stabilization inside the market. And to do that, we need regulation. And with the regulation, we need to instill price discovery rules. There needs to be all these things that need to happen so that the next bull run one isn't going to be an 8,000% or some ridiculous bull run. The next bull run will be contained, basically because we're going to have synthetic liquidity being matched with, like we just talked about earlier, physical backed ETFs, but that definitely aren't being, Bitcoin isn't being purchased on Binance to back those ETFs. I can guarantee you it's happening through some type of dark pool or OTC order through some type of large holder, which never affects the market because they're agreeing on a price. They're doing one transfer, one tranche, and they're getting their Bitcoin, they're getting their fiat. That never sees the light of day, meaning the market never sees it, meaning the price doesn't move. But the news around that will move the price. So it's like any market. Look, what happens when, you know, the euro went from 155, 59 to 105 over the course of a few years. Now it's back to 117. Look, at the end of the day, there's always new people to come in and buy. There's always new buyers, just like there's always new sellers. What you need to try to do to make a market become, let's say, flourishing again, is to make sure there's more buyers than sellers. And you do that a lot with hype. You do that a lot with well-performing assets. Here, because the assets aren't directly tied usually yet to the income of the underlying asset or the revenue or whatever, there is some fundamentals involved. We need to get, you know, thought leaders that actually know what they're talking about, to get some nice soapboxes, and hopefully the Winklevoss brothers are starting a trend. I hope we're starting a trend here in Europe. We'll start to see people that know what they're talking about, that don't go on CNBC and just talk about, I don't know, nonsense. And then we start to see, what we start to see is we start to see a real market being formed. And at that point, you start to not worry so much about you know, bull runs and bear runs and whatever. These are natural in any market. Look, we went all the way up to 20K from essentially, let's say 1K, and we went back to 6. So what? In Ethereum, we went from 30 to 1,400 back to 300 at range. So what? In normal market terms, this is normal. This is every day. This is how the market works. You know, you need to see retracements. You're not going to find liquidity at 1,400. Who's buying at 1,400? Who's buying at 20,000? Nobody. So anyway, I don't think we necessarily need a mind shift. We just need new people, and we need the market to mature, and that's going to happen naturally, regardless really of regulation. To be honest, markets mature by themselves, not to the extent that they actually need to mature, but the process starts on its own. Okay, I'm going to jump over to YouTube here. From David, any more news about the referral program? I'd love to hear more about it. So that right now is a project inside CoinMetro that our marketing team is taking, operations and finance are all kind of jointly working on. The goal here is to have a niche, several niches, a niche program that gets people excited. We're not going to directly compete with, let's say, a Binance on 40, 50% back to referrals. Why aren't we going to do that? Well, we're already giving 50% back to makers, which is huge, by the way, to bring in liquidity. So we can't, that means you can buy a Bitcoin and get paid for it. I mean, why not, right? Why not? I was going to buy a Bitcoin on Binance, but these guys are paying me to do it. So why would I not buy it here? At least the first time. And if it all works out, I'll do it again. So that's big. So we're charging, well, I guess the same as Binance now because they lowered their fees, but we're already giving 50% to makers. So that means that we can't do 50% because our margins basically go too thin, at least right off the bat. So what do? Well, we need to incentivize people some other way without just 40, 50%. Maybe it's 20% tiered in bonuses. Maybe it's 5% of all the money all ambassadors make, or an additional 5% is put into a pool, and every day somebody wins that pool. Maybe it's every quarter, maybe it's every year. Maybe there's some type of fund that we put money in and that fund does something. We're basically drafting that now. We're going over ideas. We're checking everybody else's programs, doing a bit of market research. You guys will probably end up some of you guys will end up receiving some surveys about it, I'm sure. So no specific news yet, but we're putting together, that is a key catalyst on how we're going to see our initial market push is that ambassador program. So it needs to be done well, and it needs to be unique. So it's something that we're focusing on. Okay, guys, I have 6:10 on my watch. I'll give you guys a second here to see if anybody else has a question they want to shoot out before I bid you guys adieu today. As I'm waiting, as always, I appreciate you guys coming in, appreciate the questions on Reddit. Thanks to everyone who puts in their part to curate the news that I end up talking about every week. And thanks, obviously, for everybody's support. I do think we're definitely on a strong push now, and we're seeing the light at the end of the tunnel, pun intended. And things are definitely moving in all directions. I'm not talking development GUIs. Obviously, we have progress there as well, and good progress. I'm talking about all directions: regulatory, banking, finance, operations, security. All aspects are starting to move towards that light at the end of the tunnel. All right, so just had a question I think pop up on YouTube. Give me a second, guys. Are we still on track for September go live? I missed the update earlier. So September, the end of September, which is the end of Q3, has always been, going live inside still that closed beta. And I would say, yes, we're on track. What we need to define is what is live, what we will have live, whether we're going to introduce direct fiat right away. That depends a bit on regulatory and, if not regulatory, a bit of programming to basically give ourselves some leg room on how we can do that before the license is actually granted. So yes, we're on track. Developmentally speaking, that's a word, but I'm not sure I used it in the right context there. But speaking in regards to development and in regards to overall, let's say, design and development implementation, yes, we're on track. We'll have to see what assets and what type of funding methods, et cetera, that we can get ready in that time, not so much from a development standpoint, but more from a regulatory aspect. Hey David, yeah, we covered this last week. So we've obviously been selling. Unfortunately, it took us, by the time we're actually able to secure ways to actually easily sell that crypto, it had already fallen. Not as much as it's fallen now, but it had already fallen. What I will say is that we do have funds on the sideline in fiat should we need the money. It's basically a press of a button and we have the capital. So I'm not too worried about capital in the short term here. At any rate, regardless, even if we had still the 12 million and we sold day one, this company at one point will need capital. Just because you have revenues coming in, just because you're profitable, doesn't mean you don't need revenue. Expansion costs money, and the more people you bring in, the more expansion you look to do. You're starting to acquire businesses, you're starting to do things. So we always knew we were going to need more capital. So that's always been something that we've been working on in the background. So yeah, obviously seeing the price, it's actually a good thing to me from a market perspective. If we were still going higher at this point, or we were sitting at that high, I'd be a little bit scared. The fact that we're touching these range lows or these range highs, the breakout points, is comforting to me in that level. I hate seeing the price where it is. I wake up every day and look at it and go, ugh. But I think we need to start seeing some more maturity in this market, and this is showing some maturity. It's showing how a more mature market operates, and I do expect to see some gains, over the months to come. But I do expect those gains to be more realistic than they were, let's say, last year. Geraldo, part of the marketing plan, we'll see him want to make a commercial approach. Commercial, well, yes, we will do definitely like YouTube ads. We may, and we're going to have, obviously, we'll probably end up doing some type of podcast where we'll also do some type of ads. We'll probably end up venturing into different, we're going to have the CM Academy, which obviously we may be able to do some remarketing there as well. From like TV commercial, perhaps, but again, it depends on regulation. We can't release, let's say, a commercial on Bloomberg today, let's say in the US, because we wouldn't be able to do that. Or even if we could, it wouldn't really make much sense. So yes, I do envision at some point, yes, we start reaching out into more traditional media. Here locally in Estonia, I think it probably will happen before anywhere else, and then locally in other places where we're regulated, for sure. Television, though, for the market we're trying to reach, might not be the best medium. I think YouTube and other mediums catch as much eyes or more than television does. But yeah, we're looking at all media, to be honest. All media in different forms, shapes, and sizes. When will you, David on YouTube, when will you accept more members to be in the beta group? You guys said very soon, about a month ago. Very soon, relatively speaking. I had a chat with our marketing guys and development on Thursday, yesterday, and yeah, it's in the works. So there's a few things that we need to do to make sure that it actually does work, and that we're able to easily give people access without destroying everybody else's access or giving everybody access by mistake. So I do think next week. And I will push to have it done next week. I can't really tell you when next week, but I'm going to push to have it done next week. I would assume we're going to push at least another 300 to 500 people, And then what I'd like to see, and what I talked about with the two teams, is that I want to see every week subsequent after that we start adding people until we hit the full contributor amount. And even before that happens, we probably should start seeing some live versions of that platform being released. But regardless, the same rollout will happen to the live version, where we'll start with a smaller version. We won't have such a delay, but we will start with the version. We'll do some surveys, and then we'll roll out probably weekly to add more people so that we get more feedback. Would you rather hold Bitcoin or Ethereum in today's market? Bitcoin, obviously. If you're talking about the possibility of gains buying it today, obviously there is more upside potential if you look at the highs, the recent highs for Ethereum, than there is for Bitcoin. But if you're talking about stability, what would I just rather be sitting on? I'd rather sit on Bitcoin right now. It's where the liquidity is. It's where the liquidity always has been, and it's showing its strength because that liquidity is bolstering the price. And keeping it at a relatively stable level, at least for the past since the fall, basically a low level compared to the high, but still a sustainable level. So if you ask me what I would buy today to speculate, to hold and speculate on possible gains, I'm under. My thinking is highs and lows in a market, as long as that market continues to exist, will always be tested. Which means at some point we're going to test 20,000 Bitcoin. At some point we're going to test 1,400 Ethereum. Ethereum releases a lot more information. The foundation is a lot more involved. They have spokespeople who sometimes shouldn't have the soapbox they have. I wish they paid for a PR agency sometimes to help them out. But I do think that they have the power to probably push themselves back to the high if they really, really put their effort behind it. Not so much. I'm not saying they should do things just to get it to worth more money. That's actually probably the worst thing they could do. But they're constantly talking about innovation. They want to do this side chain. They want to do level 2, which is kind of funny because it basically creates non-consensus built on a consensus layer, which is a bit funny because we're kind of going away from what the initial thought process was around blockchain. But they are coming out with these innovative things. They actually have a more, I think, solid foundation. So if it was for speculation, to hold and speculate would probably be Ethereum. But if it's for I need to hold it and I need it to just hold it and maintain some value because I'm going to need to use it, it'd be Bitcoin. My personal opinion, right? Again, it's not financial advice. Don't go buying a bunch of Ethereum on my behalf right now. But that's my opinion. Okay, guys, I don't see anything else on. Oh, something popped in on Facebook. Brooks Bailey, when are you hoping to implement margin trading? Margin trading we want to do as quick as possible because from a commercial aspect, that's where the money is, guys. Exchange, it's break even, kind of covering expenses, but margin trading is where the money is. So it really just involves us trying to figure out where the initial threshold needs to be where we can reduce our risk from negative balances. And it's a little bit on the GUI side and on the design side. So once we absolutely got through the first iteration, everybody's happy and we're live inside with the exchange, intermediate, simplex, and then the trading interface, we immediately start working on margin trading. Actually, inside our current setup, I'll tell you right now, the initial coding to get margin trading to go live is September 15th. That's when we're going to actually start the initial process. So it's obviously something that we want to get done as soon as we possibly can because from a commercial aspect, like I said, it's where the money is, 100%. So it's something that we need to put some fire behind for sure. Okay, guys, I'm not seeing anything else on Facebook, and I'm not seeing anything else on YouTube. So with that, I bid you guys an adieu. 6:19 here in Estonia. Have a great weekend, guys. Spend some time with family and friends. Stop looking at the Ethereum and Bitcoin price for the weekend. Turn your phone off or whatever. Take that stupid widget that you look at every 15 seconds. Throw it away for the weekend. Stop paying attention to it. Have a little bit of downtime for me, please, because I probably won't. And I will see you guys next Friday. I promise you that I'll have a little bit more detailed update. I'll spend a bit of time with that over the week. And I think we'll have a couple good news points that we're going to point out next week as well. And I'll try to visit Telegram and see what the trolls are doing for a bit and say hi to say hi to some of our loyal guys on there. We got Oliver, we got Timmer. I'm gonna miss guys, so I never want to do name calls because I know I'll miss people. But anyway, guys, I'll try to visit. And thanks for coming by. See you guys next Friday. Please help out. If you see a news story you want me to comment on, make sure Reddit or Telegram knows about it. And please get on that Reddit, ask some questions. The more questions, the merrier. And it's Ask Me Anything, guys. So please throw something out there that you want answered, and I'll dig into it, see I'm related or not. And that's it, guys. And yeah, Riley, all the guys on Telegram, Riley, Carlos, all those guys, and I'm gonna miss those guys. I'm gonna miss names on that one too. So apologize if I missed, but the whole team, both CoinMetro, Mazix, everybody that's in there, thanks, and thanks for doing a great job. Thanks for hanging in there. Thanks for being part of the community, and see you guys next week.